You bring out a very important point, just how it is important for us to have a stable currency where it is.
Yes.
And on the other hand, you have we still like experiencing the aftermath of the rate cap regime.
Absolutely.
Where interest rates are, I think, historical low.
Yes.
So when the interest rates are at a historical low point, then it presents vulnerability on the currency.
Yes, that's true.
So I don't know.
Maybe you can speak to it, because we've seen quite a bit of capital flight from the market, and partly why we've lost half a trillion
portfolio
shillings.
outflows.
Yes, why we've seen that portfolio outflows, and that's partly the reason why the currency has actually depreciated. Sure. Yes, but from why is it? I think we've seen the worst of it. Yeah. I want to believe we've seen the peak of it, and we should actually now sort of normalize, and that's why I'm not extremely bearish on the exchange rate. Yeah.
I mean, from what you say, we have a very good reason to defend the currency.
And we do.
And I think the central bank has done a good job keeping it stable.
And honestly, I think it's fair it's important to be clear that this is a common intervention across the board.
Yes.
We've seen the Fed come into the market to pump in cash. We've seen other central banks come in to pump in their own currencies or otherwise to try and just maintain their stability, especially where the currencies are more vulnerable and pose a significant economic risk to the country. So it's a normal intervention, and the central bank should not be really faulted for distorting the traditional economics.
And I mean, I think if you look at even our currency, compared, I'm speaking like from an investor's point of view, where we actually invest across the continent. Kenya is one of the easiest places to put in money and pull out. One of the easiest.
We've long argued that the shilling is actually a safe haven from where we sit. But all in fairness, we've seen like a considerable decline in the current account position, which means ideally the shilling should not be depreciating as much. And with all this that's happening, the mere fact that the import side is much heavy and it's not, and we've seen some slack on that perspective. As much as, yes, we've also lost quite a bit on the export side, I think there's a fair balance that should keep the current account pressure quite mute.
I think we posed a question at you and we left it hanging.
And before I answer that question, which I agree with her, I think it's also good to look at this asset class as a fixed income asset class. One of the things that has happened within this cycle that we are undergoing through is that there has been a shift of portfolios. People, investors are moving from, the equities and reallocating their portfolios on the fixed income side of things on account that it is pretty safer as it were. This was witnessed in the current infrastructure bond that we had last week. The government was looking for about 60 billion shillings. They got 68. They took 57. So as much as we want to think there is a flight, I think probably the money is being reallocated within the economy.
There's local money.
Local
money is being reallocated.
Absolutely.
Yes.
Absolutely. And that's why we are also very keen from the demand side to ensure that there are the right policies, even from the government, which is the issue of, to continue supporting this asset class by way of tax incentives. We know that, there is the tax bill 2020 that has been proposed, and it has, proposals around how that asset class should be, managed going forward. There is a proposal around the withholding tax on foreign, investors. There is a proposal on the interest that accrues from those bonds, and I think the demand side, and that is the secondary market, is an important facet to ensure that the very government continues to be successful on the local issuance of debt. Because going forward, because every economy right now has had the pressure of the COVID. So most economies will rely on their local
markets,
markets for capital raise. And the capital markets through these fixed income bonds forms a very good channel for the government to raise long-term funds. This market has raised a bond that is 30 years. You know, if we pass through the cycle and the government is able to come in and raise a long-term debt, that might go to assist, you know, some sectors that will be impacted directly by this pandemic. So the point here is that from a government point of view, which is actually the issuer of the local debt, we need to have favorable, you know, incentives to this market. This market has been pretty successful. As a matter of fact, from where we sit as an exchange, our systems are interfaced directly with the central bank, so that if she comes and she wants to buy a bond, she can buy a bond now, and in the next hour it will be in her books in central bank, because we settle on a real-time basis in central bank. So we think that you know, interface between ourselves and the central bank, you know, issuing for the government should continue, and the right policies by way of tax incentives needs to come to play, because you can come up with a tax, you know, policy that is speaking to, say, increasing a certain quota of the tax, and you lose the benefit of actually raising that capital, because the appetite is there. And as you rightly put it, right now I don't think liquidity is a challenge. It's where to place this liquidity, and the fixed income class has been one of the safe havens for investors when things are not working. Now with what we have said, I'm sure they will also look into the derivatives market, and as we were saying, this local portfolio will be reallocated within our economy, because every economy has been affected, and we are one of the best bond, you know, markets in Kenya. And as I have said, we settle on a day basis. Some markets, including developed one in down south, they settle after 5 days. We do it on a real time. So it's one of the most interesting markets. And I think even this money that may be coming off the equities will find its way without having a lot of flight. And to her point, then that will not put a lot of pressure on the shilling as it were.